First thing I want to say, this is a lecture about banks, okay? And that means traditional banks who take deposits and lend money. It's not about investment banks. That's another lecture. An investment bank a pure investment bank does not accept deposits. And its most characteristic thing is underwriting of securities. So that's a different lecture. And I'm not talking about central banks in this lecture. That's also a lecture on monetary policy. Central banks are the government organizations that manage the money supply of a country.
Ryland, your article is about how money gets created. We're surrounded here by gold in the vaults of the Bank of England, and historically in the gold standard, the amount of gold would have been related to the stock of money in the economy. Things are very different now. In the modern economy, where does money come from?
Well, broad money, which in many ways is a better measure of the amount of money circulating in the economy, includes all the bank deposits of households and companies. And one of the key points of the article is that banks create additional broad money whenever they make a loan. Now, while this is nothing new, it is sometimes overlooked as the main way in which money is created. And it runs contrary to the view sometimes put forward that banks can only lend out deposits that they already have. In fact, loans create deposits, not the other way around.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
Central bank liquidity swap lines are among several facilities established by the Federal Reserve to support the economy during the coronavirus pandemic. They were first used during the 2008 financial crisis and were recently enhanced and expanded to a larger set of countries. But what are swap lines? How do they function? And why are these liquidity arrangements with foreign central banks important to households and businesses in the United States? In today's global economy, bank funding markets extend across borders, and developments in any one area can have a far-reaching impact. When these funding markets break down, the provision of credit to businesses and households in the United States and other countries can be disrupted. As our nation's central bank, it's the Federal Reserve's responsibility to do what it can to support the functioning of U.S. dollar funding markets, both at home and abroad, to shield the U.S. economy from financial strain. One way the Fed does this is by entering into U.S. dollar liquidity arrangements, or swap lines, with foreign central banks. Acting on behalf of the Federal Reserve System, the New York Fed and a foreign central bank agree to exchange or swap currency of equal value for a set period of time. The Fed supplies dollars and receives an equivalent value of foreign currency. At the time of the agreement, a market-based exchange rate is applied to exchange foreign currency for U.S. dollars. That same exchange rate is then applied when the transaction matures. In addition to a fee paid by the foreign central bank, the Fed receives back the same amount of dollars it initially provided, meaning it bears no foreign exchange risk. And it is the foreign central bank, not the Fed, that bears the risk of lending to financial institutions located within its jurisdiction. When U.S. dollars are made available to foreign central banks during times of market stress, it provides certainty and stable pricing to financial institutions in those jurisdictions. The financial institutions are then able to extend credit to households and businesses that rely on U.S. dollar funding markets for trading and investing, and U.S. dollar funding markets around the world continue to function normally. As a result, funding markets in the United States remain stable. Developments in one part of today's global economy can have significant impacts for everyone. Entering into U.S. dollar liquidity arrangements with foreign central banks ensures that financial institutions around the world can provide credit to households and businesses when they need it, and shields the U.S. economy from financial strain. For more information, visit nyfed.org/swaplines.
When our Reserve Bank governors keep repeating that the Reserve Bank in New Zealand banks the banks, it is a very confusing statement because it implies that the buck stops with the Reserve Bank in New Zealand when in fact The Reserve Bank of New Zealand is in turn banked by banks external of our economy, which sees 95% of our currency originated indirectly as loans of fiat credit from these external institutions. The implications of global liquidity developments for New Zealand. New Zealand banks fund a significant proportion of their balance sheets by accessing offshore wholesale debt markets. They do this by borrowing in foreign currency, then swapping this back into the New Zealand dollar. Conditions in global financial markets are therefore an important determinant of New Zealand bank funding. New Zealand banks tend to focus on the primary market, new issues, rather than the secondary market debt. Hence, funding liquidity is more immediate importance than market liquidity. New Zealand banks typically use market makers to help facilitate foreign currency swap league involved in borrowing from offshore. Market makers take the other side of the transaction with New Zealand banks. This is via settlement accounts at the Reserve Bank, I add. Market makers take the other side of the transaction with New Zealand banks, providing New Zealand dollars in exchange for foreign currency that the banks have raised or charging a spread.
We've decided the best way to start this course is by providing you with some historical background about the investment banking industry. History doesn't play a critical role in many modern businesses. This is not the case in the world of investment banking. History, name, tradition, and reputation are some of the most valuable assets these companies have. An investment bank that's been established 200 years ago has the connections, partnerships, and know-how, allowing it to attract top-tier clients and investors. Therefore, it is imperative we understand how these organizations operated in the first place and how their businesses evolved throughout the distance of time. The main drivers of change we will have to examine are government regulations and market dynamics. The aim of this section is to enable you to see the full picture. Before studying the services offered by investment banks, we will learn what led to the conception of these services. In addition, these are some of the most popular topics at investment banking interviews. Recruiters and industry practitioners will likely test your knowledge to determine whether you have a genuine interest to work in their industry. In the next lesson, we will go back in time and learn who started offering investment banking services and why their role was so important for the growth of the U.S. economy in the 19th century. Investment banking emerged in America in the 19th century, when the American economy was growing so fast that commercial banks could not serve the expansion of railroads, mining companies, and the heavy industry. The main activity of investment banks is now known as security underwriting. They bought financial securities, like bonds and stocks, from an issuer and resold these securities to a group of investors. We can say that investment banks served as a bridge between demand and offer, between people who had capital and wanted to invest it, and people who needed financing for one of their projects. The main clients that investment banks had in these early days were government entities. When these governments required financing, they needed to issue bonds and sell them to investors. To do that, they used the services of middlemen, or investment bankers, as we would call them today. The governments didn't have the expertise to sell bonds on their own. They didn't know how to price them. They weren't unbiased in the negotiation of proper terms. And individual investors didn't think their interest would be protected without having a significant bargaining power. This is how prominent middlemen came on the stage. Their role was to negotiate great terms with the government, buy a fraction of the bonds that the government wants to offer, and sell the bonds to final investors. There is one important detail we shouldn't forget, though. Before agreeing to distribute the government's bonds, the middlemen contacted potential investors and created a list with the ones who were ready to purchase the bonds. They had to be certain that they could resell all bonds issued and wouldn't be stuck with any of these. As you can imagine, when an investor buys government debt, they can have two types of problems. The government can default and stop repaying its debt, or it could try to renegotiate it. That's why most investors felt more comfortable when they had an established middleman on their side. In 1842, 8 American states defaulted because their economies relied heavily on the production of cotton, and the price in that year was too low. These states could not repay their loans and refused to do it, which put at risk the capital of the investors who bought these securities. The middlemen who arranged this sale reacted in a decisive manner. All the attempts of these states to raise new capital were unsuccessful. James Rothschild was quoted as saying to the representatives of the federal government, "You may tell your government that you have seen the man who is at the head of the financiers of Europe, and that he has told you that they cannot borrow a dollar, not a dollar." The result of these actions was that the defaulted states agreed to a restructuring plan, which satisfied the investors and repaid them their capital. This episode proves how important investment bankers were in the 19th century. Such episodes increased their reputation, which allowed them to work with top-tier investors. All issuers of debt and equity wanted to work with middlemen who could contact top-tier investors. We can conclude that investment banking services were born because they were needed by both investors and financiers. These so-called middlemen brought to the table something very important: their reputation. The quality of a security was associated with the name of the investment banker who sold it to the market. This aligned the goals of investment bankers and investors. Investors wanted to maximize their returns, while investment bankers needed to keep their investors happy and keep their business in the years to come.
In this lesson, we mentioned the Rothschild family and one of its members. Prominent middlemen like Rothschild paved the way for the investment banking industry and epitomized the first investment bankers, people with huge influence and a loyal client base. The Rothschild family is one of the historical powerhouses in investment banking. Let's learn a few interesting facts about them. The Rothschilds knew about Napoleon's defeat at Waterloo before the government. They had a very efficient network of couriers, which allowed them to learn about Napoleon's defeat a day before the government did. Nathan Rothschild kept the secret to himself and immediately started buying British government debt. And given that Napoleon was defeated, the prices of British government bonds soared the very next day. Nathan Rothschild could sell the bonds 2 years later at a profit of 40%. German Emperor William was fascinated by their castle in France and said that kings couldn't afford this. It could only belong to a Rothschild.
Commercial versus investment banks. At this point, you might ask the following question. Hey, what about regular banks? The types of banks that provide mortgage loans and take deposits from regular customers. Aren't they the ones who should be dealing with investment banking operations? And it would be a fair question. The regular banks we see around us, providing loans to the population and collecting its savings, are called commercial banks. These are mainly involved with deposit-taking, credit-giving activities. These banks collect deposits from the population and then lend the money to borrowers. The difference between the interest they pay to depositors and the one they charge borrowers is called spread, and this represents their main source of revenue. I'm sure you'll agree this is very different than investment banking operations. The scale of these loans and the complexity of the operations are smaller. It is important that you understand the difference between investment banking and commercial banking lines of services. In our next lesson, we will learn about some banks that combined both types of services under the same roof.
Goldman Sachs is, without a doubt, the #1 bank on Wall Street. Its staff is the highest paid on average. In 2006, employees were paid an average of $622,000 US. This figure is significantly influenced by the enormous compensation of the CEO and other partners of the firm, but is still a stratospheric figure. Of course, things changed significantly after 2008, with the average salary going down to $399,506 per employee for 2012. In this lesson, we would like to challenge you to name and describe the two main differences between the business model of a commercial and an investment bank.
As we anticipated in our previous lesson, we will talk about the combination of commercial and investment banking services and why it creates anxiety among some regulators. First, let's start with a definition. Banks that perform commercial and investment banking services are called universal banks. There are several economic arguments why this combination makes sense. Many synergies exist between the two types of activities. The main advantage being that universal banks can sell more products to the same client. They can offer a one-stop shop solution, where everything is provided under the same roof. Universal banks can be a client's trusted advisor in times of regular business and when the company must raise equity or debt. The advantage is that they will have a close relationship with the firm and will know its business inside out. At the same time, there are good reasons the marriage between investment banking and commercial banking activities can be dangerous. Given that universal banks have more information about their clients and that often their clients are also borrowers, universal banks may be tempted to sell to the market, through investment banking services, risky positions that are likely to cause losses. This will be a hit to their reputation, but will prevent them from losing their own money. Due to these concerns, the Glass-Steagall Act was introduced in the U.S. in 1933. It prohibited commercial banks' engagement in investment banking services. Commercial banks could not trade and distribute securities. 66 years later, the Glass-Steagall Act was repealed, allowing banks to sell commercial and investment banking services under the same roof. This led to mergers and to the formation of global financing conglomerates, giants like HSBC, JP Morgan Chase, Bank of America, and Deutsche Bank. Very few of the historically established names remained pure investment banks. Banks like Goldman Sachs, Morgan Stanley, and Lazard chose not to enter the commercial banking market and continued to offer traditional investment banking services. Nowadays, investment banks offer a complex range of financial solutions. Their products encompass a wide range of areas, like underwriting of debt and equity, advisory on mergers and acquisitions, trading, and asset management. It is understandable why underwriting and advisory are the two traditional activities that stand at the core of investment banking. This is, after all, how the business started in the first place, and how investment bankers add the most value for their clients. This is how they build historical relationships that last decades and even centuries. Sounds very romantic, doesn't it? Trading and asset management are the two other areas where investment banks are very active. Historically, there has been a significant debate over the fact that some contain an intrinsic conflict of interest. For example, an investment bank may trade stocks on its own account or on behalf of its clients. If the market crashes, which are the securities that will be taken care of first? The ones of the clients or the ones of the bank? Another issue is that investment banks have research departments whose job is to examine stocks and provide recommendations. Banks provide underwriting services. It is highly possible that the opinion of a bank's researcher would be influenced by the bank underwriting the given company's securities. These situations represent a huge problem for the industry, and that's why the so-called Chinese walls have been created. The role of Chinese walls is to create a barrier between different divisions whose interaction could cause a conflict of interest. Client information is confidential and cannot be shared with people from the same firm who do not have an authorized access to it. We will look in depth at these issues in the next section of the course, where we'll provide a detailed description of the 4 main areas of investment banking activity. See you there.
Welcome to the New Zealand Treasury, who are the government's lead economic and financial advisor, who provide advice to the government on its overarching economic framework, on its fiscal strategy, on achieving value for money from its investments. We implement government decisions. I would suggest it's more like the government implements Treasury decisions, and are also responsible for the financial statements of the government, for ensuring effective management of assets and liabilities on the Crown's balance sheet, and for publishing economic and fiscal forecasts. And then within the Treasury, you have the New Zealand Debt Management. It used to be called Debt Management Office, recently changed it to straight Debt Management. Why? Who knows? But the debt management is part of the New Zealand Treasury, the government's lead advisor on economic, financial and regulatory policy. The New Zealand Debt Management is one of the functions of the Capital Markets Directorate at the New Zealand Treasury, the government's lead advisor on economic and financial and regulatory policy. We oversee the government's borrowing requirements and associated activities with a goal of managing debt in a way that minimises costs over the long term while keeping risk at an appropriate level. And as I mentioned earlier in this video, in the document from the Reserve Bank explaining how the internal institutions that have accounts with the Reserve Bank are refinanced by investment banks external of New Zealand, the Debt Management Office keeps a list of those approved registered tender counterparties. And at present, it is this. In the past, I haven't looked at this for a while to be honest, but in the past it used to be all foreign investment banks, but I see now that there are some New Zealand banks creeping in, and giving earlier on in the video what they said about universal banks. These banks are now of a size that they can do their credit assessment and also issue the credit reserves that create money at the same time, which is a pretty dangerous situation. And on top of that, I'll show you in a second that if you go to the shareholding interest sections of the annual reports of these so-called New Zealand banks, they are all in turn owned by larger foreign investment banks, and with the private equity fund BlackRock starting to creep in on the ownership list. So let's take a visit to the Westpac Bank 2023 annual report. If we just scroll down, all of these reports have to have a section of shareholder information. So if we go to that, and within it they have to disclose the 20 largest shareholders in the company at the time. So if we care to take a look at that, you will see that our New Zealand Westpac Bank is not quite so New Zealand. The senior most shareholders in it are all foreign investment banks, and mainly all privately owned. You'll find foreign investment banks, so the nominee trust accounts of the families. So no one else can buy into these banks. You quite essentially have to be born into the families that own them. And what is also starting to appear is this. As at the 30th September 2023, BlackRock Group, comprised of BlackRock Inc. and its subsidiaries, State Street Corporation, comprised of State Street Corporation and its subsidiaries, the Vanguard Group, rah-de-rah-de-rah, have relevant interest 5% or more of the total number of votes attached to all of the voting shares. So BlackRock and another mainly commercial property private equity fund, Blackstone, are starting to make major appearances in a lot of places. So if we go down to here, this section here discloses how closely held the shares are in the hands of a few, because it discloses those that own 100,000 and over amount to 722 of the 654,000, or nearly 55,000 shareholders, or 0.11% of the corporation own 56% of the shares. And even just as interesting, this section here is a section that discloses capital notes are a form of borrowing. So this is the borrowing of the bank, and guess who? The bank is borrowing from the same people that own the bank. So this bank has become rather huge, and given that it has credit assessing capacity within New Zealand and now is on the list of registered counterparties, has credit writing capacity, or even if that's not concerning enough, it doesn't really matter, because if it is buying our government bonds, it is still creating a foreign liability, because our so-called New Zealand bank is foreign owned. Now we move on to take a look at what is called the shadow banking sector. This is a bunch of law firms, investment advisory outfits that have affiliations with foreign investment banks that bring further foreign debt capital into the country for the likes of corporate bonds, any sort of major needing or wanting of capital can come in via the NZX debt market, or some of them have channels through the New Zealand debt management. Just all manner of ways, but I'll just quickly give you a rundown on one of them, is Cameron Partners. Began back in 1995 as an investment advisory company with forming relationships to foreign investment banks, as per here, their global alliances. And at the moment, Cameron Partners, as you can see, of New Zealand, are the official associates of Rothschilds and Co. In 2008, Cameron Partners began its long-running global alliance with Rothschilds and Co. Like us, Rothschilds and Co. is a leading and a trusted investment banking firm that values long-term client relationships based on high integrity advice and exceptional client outcomes. So, Cameron Partners is only an investment bank because it's affiliated to one. Now, back when all our finances and houses and everything went down and the global financial crisis hit in 2009, there was a big meeting held, and in a crisis everybody's, how are we going to keep the country funded and going ahead? So Cameron Partners, it was agreed they would form a capital market development task force, which reported in this report in 2009. And Cameron Partners, Rothschilds, was the chair of the task force. And down here, the main theme of the task force was Part B, making capital markets an engine room of growth. So in other words, letting the gates open to foreign debt capital was the way forward for the country. Divulging into certain areas where the local government funding agency, which is a big special debt investment vehicle, was formed for our councils so they could band together and have collective collective collateral. Collective responsibilities would give them cheaper access to foreign capital. This is explained here is this because the report on how it operates is done by Cameron Partners itself. A group of 9 councils strongly supported LGFA's development and formed a steering group with the local government in New Zealand to turn the concept into reality. Key advisors Cameron and Partners and Asia Pacific Risk Management, which is a subsidiary of PricewaterhouseCoopers, one of the 4 major accountancy houses of the world that didn't come out in a good light after the global financial crisis of 2008 for the advice they've been giving around the world. So the government of the day adopted a lot of the recommendations in this report in 2009, and since then the shadow banking industry with access to foreign investment banks has grown exponentially, and I contend is putting our country in a lot of risk. These banks are borrowing more, allowing people in our society via corporate structures, remuneration structures, to borrow more, write it up as profits straight away, transfer that via remuneration packages to the senior owners of the banking system, and one day it's all going to come crashing down, and those foreign creditors are going to be looking to the New Zealand taxpayers for the money that the senior owners of this system have essentially asset stripped and stolen. In my humble opinion, of course.
Okay, just finally, I just was hoping to ask you a little bit about the issue of money creation. Now,
Here's some.
we get a lot of comments on our site about this, and you're probably familiar with the papers that came out of the Bank of England 3 or 4 years back. I'll just read you a little bit from this. So one of the things they said is when a bank makes a loan, for example, to someone taking out a mortgage to buy a house, it does not typically do so by giving them thousands of pounds worth of banknotes. Instead, it credits their bank account with a bank deposit of the size of the mortgage. At that moment, new money is created. Now, this has created a perception that banks can create money out of thin air and they don't really necessarily need to borrow through deposits or bonds from the public as they do. These two things seem to be at a bit of conflict. So I'm just curious as to what's the take from you?
They can create credit, and that credit has to be good credit because they need to get it back to pay the people who they borrowed from. And that's why we need more capital. So we are the only ones who have the monopoly right to create money per se, which is, the notes and coins. And that is why we then set and make sure that our money remains worth something. That's why we keep it a low and stable inflation. And we make sure it's very hard to counterfeit so that people trust it and can put it in their pocket and a means of exchange. The banks need to borrow. They can either take it from shareholder capital or they can raise their own debt so that they can then on-lend. But banks can lend more than they borrow because they can have leverage, and that really comes down to about how much more capital do they have. But it all has to sheet back home to our interest rate and our amount of money, and if we see inflation running out of control, we always have the total ability to maintain that. So there's core money, and then there's the wider credit that's available in the world.
Is this an area that you've talked about much internally at the Reserve Bank, that in terms of the public understanding of how this works?
We obviously need to get better, judging by some of the comments that you've been talking about. And yes, we have, and we've got some publications, and so we will blow the dust off that and put it back out so that people understand what core money is, and then what the role of credit creation is, and how banks create that credit. And it's really critical, in particular, for the capital part of it, because if you only have to hold 10 cents for every dollar you loan, then if everyone comes back at the same time, for all the people that borrowed the money, lent the money to you, to the bank, comes back and says, I want it back now, well, you haven't got it. You've only got 10 cents in the dollar. And so they have to be comfortable that they have lent appropriately.
Well, look, thanks a lot for that, Adrian. That's Adrian Orr, Reserve Bank Governor, and I'm Gareth Vaughan at interest.co.nz.
The money we have in our pockets is just paper or base metal, but as long as a currency retains public confidence, the intrinsic value of banknotes and coins is irrelevant. Its value is derived solely from its acceptance as a medium of exchange. However, that has not always been the case. Until early last century, most major economies had adopted the gold standard. Banknotes in circulation literally represented a share in a country's gold reserves. Theoretically, a central bank could be called upon to exchange any banknote for its value in gold. So it was the task of the central banks to ensure they kept sufficient gold reserves to back the currency in circulation. Today, however, money derives its value from its purchasing power, the value of the goods you can buy with it. So the job of a modern central bank is mainly to make sure that the amount of money circulating in an economy is properly balanced against the value of the goods that it can purchase. In that way, the value of the currency can be protected.
But I put it to you, we're a small open economy. We have high levels of private sector debt. Mum and Dad have borrowed that debt effectively from foreigners because their local bankers source that from foreigners.
Just back on the exchange rate.
Yep.
What about a broader discussion about things we could do, such as a tax or something on so-called hot money? I mean, how?
Yeah, well, again, I mean, that's very dangerous territory for a country that's capital strapped, that has massive net external liabilities. I mean, no OECD country borrows more of its borrowing from foreigners than New Zealand. So if you put a tax on that, you have to get into the definition of what is hot money, what is legitimate investment in New Zealand. You run the risk that you ultimately force up interest rates, and that's a more expensive burden on the economy. So, I don't think that's practically going to work.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar, so why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah, so a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, I guess I can't really talk, I don't get it. I don't know what they're talking about, because it's like, the government clearly prints money, it does it all the time, and it clearly borrows Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
So Russia and China, for example, have the largest gold stores, central bank gold stores. Is that, because that is a money, holds its value, it has a, are you concerned about that at all?
I think the number one thing to know is that that's already priced in. People have already made the decision whether to hold a physical US dollar versus a gold bar in the cupboard. So those choices can always be made. It's quite hard to take a gold bar down to the shop and buy a haircut. It's it's that physical cash. So that whatever the dominant currency may or might change through time, but it's there's nothing obvious. Neil, you're a professor of monetary economics.
There are peculiar features of the US regime that allow it to be the international reserve currency. Its availability, the credibility of the American Monetary Authority. So that could change over time, but those things tend to change only slowly. In the 20th century, we just had two, really, the transition from sterling to the US dollar. So we don't expect rapid changes in those sorts of events.
Thank you. Fiat currencies, such as the New Zealand dollar, exist because it's got the legislation, power of Parliament, ability to tax, and through time intergenerationally that there is the balance sheet support behind it, and a credible institution such as an independent central bank to maintain low and stable inflation. We actually fund ourselves and then work out what dividend is needed to pay. So we kind of it's a great business to be in, central banking. You print money and people believe it, and touch wood. And so it's a slightly different beast.
Linking that back, so sitting on about page, can't remember it is, page 4, we've got a comment about the margin between mortgage rates and wholesale interest rates being expected to return to more historically normal ones. And that pushed me back to MPS about 3 or 4 years ago when you talked about, you may not remember it, but I do. We were discussing long-term historical interest rates, and at that time, interest rates were at about 2 to 3%. And you were saying that was, from at that time, I recall you saying you thought that was about the long-term historical norm for interest rates. So, I mean, there's a couple of things sitting there. One is that margin as to how different it is from the historical average, because I just don't understand that, and how quickly you expect it to return to that historical average. And then thinking about interest rates long term as well, whether you've changed your views at all on the long term interest rate outlook.
So we think about the margin, it depends on what you're talking about, whether it's the net interest margin, which is the average funding cost to average mortgage cost, or whether you're talking about wholesale rates to mortgage rate. When we were talking about returning to the average, it was a reflection of the wholesale rates to the mortgage rate. And actually with movements we've seen in the last week, we're back at about where the average was. Because we've seen wholesale rates come off substantially off the back of, first of all, the Fed indicating that there was a high likelihood of no further interest rate rises in the US. New Zealand's wholesale rates are heavily influenced by global wholesale rates, and in particular the US. So that was
when our Reserve Bank governors keep repeating that the Reserve Bank in New Zealand banks the banks. It is a very confusing statement because it implies that the buck stops with the Reserve Bank in New Zealand, when in fact the Reserve Bank in New Zealand is in turn banked by banks external of our economy, which sees 95% of our currency originated indirectly as loans of fiat credit from these external institutions. The implications of global liquidity developments for New Zealand. New Zealand banks fund a significant proportion of their balance sheets by accessing offshore wholesale debt markets. They do this by borrowing in foreign currency, then swapping this back into the New Zealand dollar. Conditions in global financial markets are therefore an important determinant of New Zealand bank funding. New Zealand banks tend to focus on the primary market, new issues, rather than the secondary market debt. Hence, funding liquidity is more immediate importance than market liquidity. New Zealand banks typically use market makers to help facilitate foreign currency swap leg involved in borrowing from offshore. Market makers take the other side of the transaction with New Zealand banks. This is via settlement accounts at the Reserve Bank, I add. Market makers take the other side of the transaction with New Zealand banks, providing New Zealand dollars in exchange for foreign currency that the banks have raised or charging a spread.
New Zealand's become a harder place to invest in.
How so?
Well, I mean, the current government's made various changes, and it hasn't really looked like it's been that welcoming to foreign capital. And there's just lots of different things. I mean, I find it remarkable when people are so worried about foreign capital. I mean, I saw it last night. I saw, I think Greenpeace were on TV going, "Oh, yeah, we want renewable energy, but we don't want foreign capital." Well, who do they think is going to fund this stuff, and why would you care? I mean, if you care about the environment, if the number one thing you'll worry about is the impact on CO2 emissions and the likes, and getting rid of Huntly being coal-fired and turning on a new, wind farm or a new hydro facility or whatever it might be, that's what you should care about. Whether that money comes from an investor who lives in Israel or New York or wherever, why would you care? I don't care.
Once upon a time, a small band of Vikings found an island of ice and fire. It was a harsh but beautiful place, and for 1,000 years they survived off the fish in the sea and the sheep in the meadows. Dirt poor but wildly creative. Iceland invented the saga, intricate tales of fairies and goblins, heroes and ghosts. And with these bright minds and strong backs, they evolved into one of the best educated and most comfortable societies on Earth. A fine place to be a fisherman like Stefan, or a working mom like Inga. A place of democratic freedom and fairness for a prime minister like Geir and a folk singer like Bubby. And then a modern saga began when the rulers of this place unleashed the bankers, allowing financial Vikings to search for plunder around the world. They made a few deals and brought home a fortune. They used it to borrow vast sums and make even bigger deals, buying soccer teams and airlines and grocery chains. They built banks in foreign lands and were hailed as heroes.
Suddenly, in a country where you had never seen rich people, we had people who were making $1 million a month.
Ships began to arrive filled with German cars and French wine. And their once humble currency with a fish on every coin became incredibly valuable. But while they could afford all sorts of foreign goodies, prices at home were going way up. So the island's rulers raised interest rates to control the inflation. But it didn't work, because people realized that they could borrow Japanese yen or Swiss francs, put it in Icelandic banks, and make 10% without even trying.
Everybody was getting rich.
Well, many people were.
And suddenly, for the first time in 1,000 years, Icelanders didn't need to chase cod to make money. They could make money with borrowed money. And boy, could they make a lot of money. Stefan the fisherman left his boat and joined a bank.
I got a bigger house, I got bigger and more cars and better snowmobiles.
Have you heard these stories about fishermen who would sell their quotas and get into investment banking?
Yeah. And buying malls.
And buying malls. Booby, the blue-collar folk singer, started selling his music for commercials. He became a judge on Icelandic Idol and began hanging out with those financial Vikings. And Inga and her husband began spending less time with the kids, more time at their bank jobs.
Everyone had to have the largest cars, the biggest houses, and people our age, around 30, they were just floating in money.
I kind of felt like I had arrived in Parswell in the movie It's a Wonderful Life. Everything had changed so much, so fast.
During this party, few people were concerned that Iceland's big banks had borrowed 6 times more than the entire nation produces in a year, or that they had vested most of it in something from America called mortgage-backed securities. After all, a big bank in New York had done the same, but when that bank crashed, Iceland's economy followed, almost overnight.
I lost a lot of money. I lost my job.
I owe a lot of money. I lost everything. I lost millions.
Technically speaking, we are bankrupt.
Like so many Icelanders, the value of their home collapsed almost instantly. And instead of owning much of their home, suddenly they owed the bank much more than it's worth. People looked to their government for help, but they seemed confused, paralyzed. We need pocketbook! Crowds began to gather outside Parliament, growing bigger and angrier by the day.
All kinds of people from all the different political parties, from all walks of life, people you had never seen protesting before.
It's now known as the Pots and Pans Revolution. No injuries, few arrests, and instead of blood, streets ran with thrown food. But it was enough to force special elections. The Prime Minister replaced, and 2 protesters were voted into Parliament.
You got it all.
Yeah.
Now you are a member of Parliament.
Yes, I am.
That's amazing. So from out here to in there in the space of a few months.
Yeah.
Some think testosterone is to blame for most of this. Unlike the rest of this gender-equal country, it was mostly men running those banks and taking those risks. So more women now share the power and will help guide the recovery. And there is so much to recover. Unemployment is high, malls are empty, grand projects silent and unfinished. Stefan, he hopes to return to fishing. Inga writes an advice blog for other unemployed moms. Bobby is singing protest songs again, and like most of the people he used to lead, a former prime minister hopes hard work, simple desires, and the sea can bring them all back.
In a land rich in sagas, what's the moral of this story?
Better be a big fish in a small pond than small fish in a big pond.
You still have to sail the ship home. I mean, through the hard times, it's through them who we become who we become.
What is important in life? It's only now, the present, today. I got a newborn baby. I got a beautiful wife. I have friends. I have family. I have my guitar. And that's all I need. Life goes on.
In Iceland, a volcanic eruption of the political kind. Angry protesters demanded the resignation of their prime minister when last week's sensational data leak revealed his millions of dollars of undisclosed holdings in Iceland's 3 biggest banks, which collapsed during the world financial meltdown in 2008. This past Tuesday, Prime Minister Sigmundur David Gunnlaugsson stepped aside. Iceland is known for its volcanic eruptions, among its many exotic natural wonders. And now for something else. After the crash, it let its banks fail and put its bankers in jail.
When the 3 big Icelandic banks collapsed, all 3 would have ranked among the 10 largest bankruptcies in U.S. history, had they been U.S. companies.
Historian Magnus Sven Helgason actually conducts walking tours explaining what went wrong when Iceland's bankers and businessmen set out to turn a country of only 330,000 people into a world financial capital.
These guys, they styled themselves as corporate Vikings, sort of laying claim to the mantle of the original Vikings that settled Iceland.
The banks borrowed massive sums of money, then loaned it out again at much higher rates of interest to entrepreneurs who, like the ancient Vikings, plundered, buying up companies worldwide. Money rolled in, and a nation of fishermen began believing in the so-called Icelandic miracle.
A lot of people seem to be getting very rich very fast, and a lot of people wanted to join in on that.
Katrín Jakobsdóttir is one of the members of parliament who decided on Iceland's hardline response when this whole house of cards built on debt came tumbling down.
Even though the banks also were responsible as a whole, I think it was the conviction that also the individuals within the banks had done this.
There were huge daily protests then, too. It was called the Pots and Pans Revolution. The entire economy was in freefall. Inflation skyrocketed. Unemployment more than quadrupled. And the big three banks were not too big to fail. They were too big to save, valued at 10.5 times Iceland's GDP.
We are the 99%! We
At the same time, Americans were angry too. In the United States, more than 8 million jobs were lost. More than 5 million people lost their homes. But Congress spent $700 billion in taxpayer monies to bail out the banks. And their executives kept right on collecting their high salaries and bonuses. Exactly one U.S. banker went to jail, trader Karim Saragelden. Not so in Iceland. Ólafur Hauksson was appointed special prosecutor. He was given a hefty budget and a mandate.
The question here in Iceland was criminality involved? And if there was criminality involved, there should be a prosecution.
Outside Hauksson's office, something not seen elsewhere. The country's top bankers facing charges of market manipulation and fraud, ambushed by media. How many bankers are in jail?
Between 20 and 30 have been gotten sentences of jail.
Sigurðun Arnason, former CEO of Landsbanki, will begin serving a 5-year prison sentence in the fall.
This was a part of the show.
His lawyer, Siggi Gudjonsson, dismisses the prosecutions as political theater.
A kind of a witch hunt.
A witch hunt?
Yeah. People were angry. So you had to come up with some kind of political solution.
The bankers are sent to Kvíabryggja prison. No bars, but hours from anywhere. An Icelandic journalist, allowed in for an interview, was told, "We never did anything that wasn't in the interest of the bank or its clients."
The worst thing was the broken trust.
Information security consultant Marino Nilsson was one of thousands of property owners who lost homes.
And that's why nobody feels pity for the bankers in the jail, because they cheated on us. You know, they told us lies. They covered up, and we were the one that were paying for it.
Iceland's economy has recovered, and how it dealt with its banks and bankers has taken on a kind of neat, mythical, they did it right quality for many people. But here, as last week's events make plain, the anger remains, ready to erupt at any time.
The 2008 financial crisis froze Iceland's economy for years, and it led to court cases and jail sentences for several of the country's bankers. But now those same executives say they were made scapegoats, and they are taking their case to the European Court of Human Rights. Mobin Nasser explains.
Billions of dollars lost, tens of thousands left unable to afford housing, and entire industries affected. The 2008 global financial crisis left many losers. Bankers were blamed for creating the crisis, although most of them got off scot-free. In Iceland, many were tried and jailed. But now the former president of Kaupthing Bank, who spent more than a year in jail, says he was a scapegoat and he wants payback.
We believe that some of the judges were impartial both partly because they had lost a lot of money during the economic crisis. The Supreme Court judges, some of them were investing in banking shares that they lost money on. Some of the judges had family relations which made them not eligible for sitting at the court in our cases.
Prosecution against Iceland's financial industry was ramped up at the end of 2008 after massive protests. That led to fines and jail terms for 24 heads of banks and other financial institutions. But many of the charges against them are related to practices that are questionable but were not illegal in the country at the time.
I'm not detesting at all that in some cases partly we issued loans against our own stock. This was not illegal at the time. It might be so that good banking practice today, 10 years later, would not accept this. But at that time, it was more common than you think. So basically it has taken now like 9 years out of my life.
The government that was once eager to take bankers to task has also taken a more conciliatory tone.
I'm not a very vindictive person. I think people can improve. They should be allowed to be in business as long as they stay within the law.
The European Court of Human Rights has received 9 appeals from Icelandic bankers so far. Inarsson's case will be heard first, and a favourable verdict would mean vindication for the former banker. Mubin Nasser, TRT World.
Not illegal according to the law.
And our editor-at-large, Craig Peters, joins me now live from Paris. Craig, so, okay, get this, right? On the day that these jailed bankers are claiming that their human rights were violated, we have a revelation from the Icelandic parliament saying that the government was deceived by bankers involved in the sale of Agricultural Bank to a German bank in 2003. What irony is that?
Well, you know, as irony implies that there's some surprise, this is not surprising. Remember, Iceland privatized its banks in guess what year? 2003. So what you had was there's 3 big banks on the island, and they went out and they decided, well, we're going to increase our assets from about 100% of the country's GDP to some 1,000% of GDP. And then bang zoom, 5 years later, 2008, the worst financial crisis since the Great Depression smacks Iceland. And what does Iceland have to do? You know, first Western country in 25 years that had to go to the IMF to ask for a bailout. $2.1 billion.
Absolutely right. After that crisis, Iceland let its banks go bust. I mean, 4 of the big 10 banks went bust. As we heard in Mobin's report, they jailed their bankers. Are these things that the US and the UK, in hindsight, should also have done?
You think? No one in the US or the UK went to jail over the financial crisis. Of course, the United States government bailed out Lehman Brothers for about $691 billion, if I remember. Hey, but Iceland got a deal. It only cost $83 billion they lost there. And now you hear these bankers, railing, oh, poor me. Oh, the judge who adjudicated the case, he got hit. By God, man, grow up. There are only 300,000 inhabitants of that island. Everyone got ream steamed and dry cleaned. I'm surprised not more of their bankers didn't go to jail.
Indeed. Craig, also, finally, does this signify, in your opinion, that wave of anti-corporate sentiment that we had post-crisis, has that wave passed, and are we seeing the corporations fighting back?
Yeah. I think it goes down to human nature as, you put money in a bank, even if you're distrustful of the system, you bring with that deposit a modicum of trust in the people who you're giving the money to or the politicians whom you elect. So this shouldn't surprise people, but who else are you going to trust? And I think this is just going to continue. And the hubris and belligerence of these bankers is very apparent. Going to the Human Rights Court of Justice in Europe for this? I mean, come on. It's patent silliness. And it's also dangerous.
Indeed. Craig Peters in Paris as ever. Thank you so much.
Thank you very much indeed. And thank you for inviting me to be with you here today. And
I want to start by thanking Andrew for allowing me to speak here this afternoon. I was initially planned to be here tomorrow, but tomorrow morning, together with the other Nordic heads of state, I will be at Ground Zero, where the five of us will pay the respect of our nations to those who died and suffered, to their families and their friends. So thank you again for allowing me to speak here today and change your program a little bit. But above all, thank you for allowing me to witness this remarkable dialogue that I enjoyed thoroughly here this morning. Well, 9/11, as all of you know, and we all know, symbolized a way in which nations occasionally come to historic crossroads. And the effects and the implications are going to be with us for a long time. But 3 years ago, my nation, in a very different way, because nobody was hurt, nobody got killed, also came to historic crossroads. So let me here today try to convey to you some of the lessons that we have learned during those 3 years, and I will also try to link it to the clean energy debate that we saw here in the beginning. But if you were giving the laboratory task of testing the resilience of a nation, I can't really imagine a tougher way to do it than to start with a complete collapse of the entire banking system and the economic crisis that followed. And then about a year later, throw in one of the most dramatic volcanic eruptions we have seen for centuries, covering farmlands and regions in thick layers of ash, and as many of you know, stopping air traffic all over Europe for almost a week. And then if that was not enough, then about half a year later or so, throw in another eruption, just to test us even further, and remind all of us that despite the technological excellence that we are seeing here today, we are not yet the masters of the universe. It has indeed been a sobering experience, both the economic crisis and the display of the forces of nature. But now we are 3 years later, fortunately in a position that our economic recovery is on its way. We have come back from the crisis earlier and more effectively than anybody could have predicted. Economic growth has now started. Unemployment is lower than in many countries in Europe. And this year and last year were the best tourism year ever for Iceland. So many people looking at the crisis that are still characterizing the situation in the US and in Europe are asking themselves the question, how did Iceland do it? What are the lessons that we can all learn from the Icelandic experience? I will try in the 16 minutes that are left for me to convey some of these to you. When my country became the first to be hit by the financial tsunami in October of 2008, the collapse of the banks within a few weeks came to threaten, and this is a very fundamental point, came to threaten not just our economy, but our entire democratic and social system. There were protests, there were riots, the police had to defend the parliament and the prime minister's office, and the inherent balance of the Icelandic society was in grave danger. Iceland, as you might know, has been for centuries one of the most peaceful and secure and harmonious, democratic, open and free countries in the world. And if a failure and a collapse of a financial system can disrupt our democratic community and our entire political and social system in the way it did, Just imagine what a financial collapse and a deep economic crisis can do to countries where democracy is not as solidly and historically strong and doesn't have the same fundamental basis as we have enjoyed in Iceland. So that is perhaps one of the first very important lessons, that the marketing system, whether people like it or not, carries a profound political and social responsibility. There is an inherent link between the implications of what happened in the economic area and the democratic and the social fate of our nations. We were fortunate in Iceland to realize in the very beginning that in order to deal successfully with this economic crisis, we had to instigate not only economic and financial measures, but also comprehensive political and judicial reforms. The government resigned. We called parliamentary elections to give the people the right to choose a new assembly. We appointed an office of special prosecutor to look comprehensively into whoever had possibly broken the law. We changed the leadership of the central bank and the financial regulatory authority. We appointed a special commission headed by a Supreme Court judge to examine the failure of every institution in our society, not just the banks and the corporations, but also the media, the universities, the ministries, and even the presidency. I don't know of any other nation, definitely not in Europe, that has responded to an economic and financial crisis of this nature with such comprehensive political, judicial, and social reforms. And the implication of that is that if you want to deal successfully with the economic crisis now facing many countries in the world, is that without you doing it in this comprehensive way, we doubt in Iceland very sincerely whether you will be able to gather success. Of course, we instigated many economic measures, and they are, of course, important. We, due to our own currency, the krona, were able, through the devaluation, to strengthen our export sector. This is an option not open to the Euro countries. But also, and perhaps above all, we did not pump public money into these private banks. We said squarely, these are private financial institutions, and their failure should not become the economic responsibility of ordinary people. And throughout this process, both these decisions we had to make in the economic area, as well as this comprehensive approach of not just economic, but also legislative, executive, and judicial reforms, it was brought home to us, which I believe many of my fellow leaders in other countries have not yet faced very squarely, that this crisis has brought forward the crucial linkage between the economy and the state, but also, above all, between democracy on one hand and the free market on the other, which should be paramount in the resurrection of our societies, economics or politics. It's a question we have not discussed in the Western world for many decades. But this is really the fundamental question which the financial crisis has brought to our table. It can, in my opinion, no longer be evaded, simply because there is too much at stake, as we saw in Iceland in a nutshell, and as you can now almost every day witness in the United States and in many parts of Europe. And twice events brought this dilemma squarely to my table. First in 2010 and then earlier this year, when the so-called I-Save issue, which some of you might have heard of, which in its essence was the question which Britain and the Netherlands demanded that the people of Iceland, ordinary farmers and fishermen and doctors and teachers and nurses, should be made responsible for the financial losses of the Icelandic private banks that had operated in Britain and the Netherlands. So through the support of all the European Union countries, the government of Britain and the Netherlands tried to pressure us in Iceland into taking responsibility as a nation, as a people, for the financial losses of these banks. And our parliament had passed the so-called I-Save law, and I was faced with the question whether I should sign it or whether I should put to the people in a referendum. And when all the complicated analysis had been swept away, my choice was in fact crystal clear. The will of the people on one hand versus the force of the market on the other. And every government in Europe was telling me, and many strong interests in my own country, that if I did not choose with the financial market, it would lead to a financial disaster for the country. But I chose the democratic will of the people. Unfortunately, what has happened since has not brought out all the negative, dark predictions that the so-called pundits and experts and media, what shall I call them, media leaders all over the world were in fact predicting. And I believe the United States and Europe is still facing this choice. Not just because what we could call the economic tectonic plates are shifting in a way we have not seen for a long time, but also because information technology and social media has, as all of you know, now empowered people in such a way that they are in fact able to challenge the traditional political institutions as never before. It is often quoted that we have seen this in Cairo, we are seeing it in Athens, we saw it a few days ago in 1,000 cities in the United States and in other parts of Europe. But we saw it also in Iceland in the last 3 years in a very clear and concise form. When the banks collapsed in 2008, we faced every Saturday street protest in the center of Reykjavik, turning the Parliament Square almost into a street assembly. And these people were called together by the courtesy of the internet. Then, in the following months and into 2009, when the riots were threatening our institutions, as I mentioned before, the mobile texting was their tool of bringing them together. And then last winter, when the so-called barrel protest outside our all official buildings were reminding the authorities that they had not taken enough care of the ordinary concerns of the unemployed and the people and the poor, the Facebook became their tool of mobilization. The lesson is that demonstrations and protests, which in my early years, when I engaged in those protests as a student, took weeks and even months to prepare and had to involve a wide network of institutions, have now become an instant phenomenon. So the information technology and the social media has now fundamentally, in my opinion, transformed the democratic system of our country. So what we are now seeing is people power in its purest form. And it's enhanced by the social media, but the fundamental essence is to challenge governmental and parliamentary institutions as never before. And I have even concluded, and it's a kind of a strange conclusion from somebody who has lived most of his active life within the more established institutions of the ministries, the parliament, and now the presidency, that the pace of change and the power of this social media has now become so strong, so central to the change in our societies with such speed and implications that the traditional decision-making processes within the institutions have almost become a sideshow. And I know that is a very strong statement. But I believe unless we realize that fundamental lesson, we are going to be in a both decision-making wilderness as well as an economic and democratic wilderness. But there are many other lessons that can be learned from the Icelandic experience. And since my time is running out, I'm going to run through them very quickly. As an homage to Subramanian, I will say one of the lessons also is the significance of China. When the European Union countries were pressurizing us to take responsibility for the failed banks, and the United States authorities, including Timothy Geithner, had simply lost interest in Iceland, the president of China and the prime minister were the people we were able to have a dialogue with. And it's one of the indications of that the arrival of China, as was said here this morning, is here and now, not 10 or 20 years from now, that the leadership of China was that leadership which we were able to have a most constructive dialogue with following the collapse of the banking system, leading to a currency swap agreement between the Central Bank of Iceland and the Central Bank of China. I could also tell you that throughout my presidency, I have received more delegations in Iceland from China than from the US, Britain, Germany, France, Italy, and Spain combined. The second lesson is that the banks have in fact become high-tech companies, threatening the growth of the creative sectors of our economies, even if the banks are extraordinarily successful. Because what we discovered in Iceland when the banks collapsed was that the pool of talent that the banks had taken into the ranks, engineers, mathematicians, computer scientists, programmers, even artists, musicians, designers, and others, suddenly became available on the market. And a lot of creative companies in many different sectors in my country then hired them. And paradoxically, the last 2 years after the banking collapse have been the most successful years for these creative companies in my country. And I could give you many examples. But the lesson is that a big banking sector, a big financial sector, even if, and perhaps especially if it is extraordinarily successful, is very bad news for a country that wants to, it's very bad news for a country that wants to be a player in the creative 21st century economy. The third lesson is the importance of clean energy. When I was young, over 80% of our energy was from imported oil and coal. But in the last few decades, we have moved over to being 100% clean energy in terms of all electricity production and space heating. And this clean energy dominance of Iceland has now made the country a very attractive location for investment, not just by aluminum companies like Alcoa, Rio Tinto, and Century Aluminum, but now with data storage centers, which are being built in my country for a number of reasons. One is the combination of clean energy and data storage. The other is the running cost of the data centers in Iceland is about 40% less than in other countries because we don't need comprehensive and complicated air conditioning to cool them down. We simply open the window. and also you have a lot of space. And Iceland is still one of the most secure countries in the world. So paradoxically, following the financial crisis, due to the clean energy, we have had a running stream of companies wanting to invest in Iceland. So the lesson is that if you have built up a clean energy economy, it will help you to get out of a financial crisis in the future. A clean energy economy is a good insurance policy, perhaps the best one you can buy in order to guard yourself against financial crisis in the future. Also because it provides the people with a lot of energy at a low cost. But then let me conclude by mentioning briefly the eruptions. the Eyjafjallajökull eruption, which we find very easy to pronounce. It was, as all of you know, dramatic. There were 500 tons of material that came out of that volcano every second for 3 days. For 3 days. But due to the early warning system and the comprehensive rescue system we have built by using mobile, internet and information technology, reaching into every household, every farm, we were able to bring everybody out, make everybody safe, and ensure that those local communities could recover within a few months. It is a dramatic confirmation that in the world of natural hazards, the tools available to us now can help us to prevent these natural hazards having negative impacts on our communities and our societies. So here we are in Iceland, 3 years later, with a vibrant economy, economic growth on its way, with a society which has learned important lessons, being able to deal with fundamental natural disasters, bringing the positive message to the rest of the world that if we react in the right way to these crises, if we respect the will of the people, as well as using the opportunities that these new tools offer us, we can indeed go forward and strengthen our societies both as democracies, as communities, and as areas of economic prosperity. That's the positive message I want to bring you here today. And 3 years ago, nobody in my country, including myself, could have believed that 3 years later I could come here to Camden and give you such a positive message.
So Iceland literally went bankrupt. Iceland is a country of 320,000 people, so a very small country. And the International Monetary Fund and the European Union wanted to take control of Iceland's debt. And the people of Iceland basically were like, wait a minute, we didn't do this. This was all the bankers that were doing this. It was a very small amount of people that were doing this. And they decided that they were going to fire all the bankers and put them in jail, and that they were going to take control of their debt. So there were riots, there were protests, and eventually the government resigned. Okay, are you with me so far? We got a lot here. So then the government resigns, they vote in a new government, and the new government says, we are going to have you all pay 100 euros a month for 15 years at 5% interest, and that's going to pay off the debt. But the people still weren't happy about that because they didn't incur the debt. This was bankers and all this financial trickery. They didn't want to do that. So why am I bringing this all up? Because I think this is a great, great story. Eventually, they kicked out the government, and they figured out a way to make the debt basically go away and not have the world come in and control the Icelandic economy. So the head of state refused to ratify the law that would have made Iceland's citizens responsible for its bankers' debts and accepted calls for a referendum. Interpol put out an international arrest warrant for the ex-president of Kaupthing, that's the biggest bank there, and the other bankers implicated in the crash fled the country. They decided to draft a new constitution that would free the country from the exaggerated power of international financial and virtual money. We got a little bit more here. And then they decided to write a new constitution. The people of Iceland elected 25 citizens from among 522 adults not belonging to any political party, but recommended by at least 30 citizens. The document was written on the internet, and constituents' meetings are streamed online, and citizens can send their comments and suggestions witnessing the document as it takes shape. Okay, giving you a lot of stuff there, but the reason I thought this was important is because we have such a problem with money in politics here, and these people, they actually said no to the banks. They said no to the bailouts. They fired and put people in jail who did everything wrong. It is completely the reverse of everything we've done in this country. We bailed these people out. Nobody got fired. And they got rid of the debt that they did not incur. The regular people, like the three of us, are not incurred and saddled with the debt. I think this is a great story, and it's completely underreported. And now I've talked a lot, so please
I am
away.
so thrilled that you're actually covering this story, because this is an actual story of returning power to people. What people in this country actually talk about, and the thing that we don't do. The other thing that's really amazing, this is like the modern version of the Continental Congress. I mean, they're coming in, they're drafting new legislation, a new constitution, but then beyond that, they're getting input from the web, from people who are watching it virtually. This is absolutely incredible. It's like electing a delegate and then being there as they represent you. It's an awesome thing to watch it happen.
Yeah, and everything about this is the reverse of how we do things here. So not only firing the bankers and putting people in jail, which we don't do, but having it be an open process. Remember, even when Obamacare was getting passed, they said, oh, well, everyone will be welcome and we'll put it on C-SPAN and blah. Never happened. It was all behind closed doors. Is there any chance we can look at something like this and go, we could do a little better here in America?
I wish. Maybe in Sherman Oaks, California.
Well,
do you see what I'm saying? Because we have way too many people, and with the amount of people that we have and the history that we have as a country, they have 300,000 people. More people watch the Super Bowl than they have in their entire country.
Yeah, more people watch an average football game, not even the Super Bowl. Forget the Super Bowl.
Exactly. Yeah. So of course they can kind of come to some sort of agreement, and all the people, and I hate to say this, but the backgrounds of the people are pretty much the same. You know, this Norse background, right? So they can all kind of agree on what. Well, my grandfather and my grandfather, they all thought the same thing. In this country, it's a melting pot of people who just got here yesterday.
Yeah.
You know, from Iceland. You know, people that just immigrated.
They're not coming from Iceland anymore.
Iceland, that's true. But you know, we just don't have the same consistency and continuity, unfortunately, in this country.
So is that one of the major catch-22s of America? Because the melting pot is amazing. It's what has made America what it is. But then when it comes to something like this, because we all
can't agree on anything.
We can't agree on, because our shared experience is so different.
I'll tell you, I don't necessarily think it's the melting pot issue that would cause a problem here. I think it's more our election process that would cause a problem. There is so much money, and we're seeing election laws, overturned, and companies now have freedom of speech and can put millions and millions and millions of dollars into specific political candidates who then owe a favor. The reason this thing won't happen here is because of the way we elect our officials and how we allow big money to get into the process. That's going to be the real issue, because I think once you get into this country and you see how things work, I don't even know that it's a difference in background that changes the way that you think about it. I think people start seeing what might be better. We just can't get officials in who will actually do it because our election process is so messed up.
Yeah, so that actually is a great segue.
When I say melting pot, I do mean racism. Did you guys understand that? I'm sorry, I should be more clear.
No, please.
You see what I'm saying? Like, we have a history in this country where there's still a lot of anger and a lot of inequality, and they just don't have that. It's a much smaller, it's a smaller scale, it's a smaller country. They don't have slavery. They don't have this history of black people couldn't vote until just, a few decades ago. So that's why, but it couples with what you're saying. It couples with the election process, because we're so polarized politically. We have the Democrats and then the right wing and then these liberals, and then no one's really in the middle. They say they are, but they're not, and so it muddies up everything, and we can't. It's like we can't get along. I know that's such a terrible bumper sticker to take it back to bumper stickers, but why can't we all just get along? They obviously figured it out in Iceland.
Yeah, well, doesn't this also go to show how the media is also in bed with big money and big politics and everything else? Because nobody knows about this story.
Nobody knows. I knew about it.
Yeah, but I mean,
someone tweeted about it, but it's only because of Twitter.
Well, there you go. But a lot of people, this is not the type of thing that's being shown on CNN. Let's put it that way. So that media is not giving us a chance to realize even that things can change, because they would never show this. You think Fox is going to show a thing about the big banks not winning in the end? Like, we just have this theory here that we're just sort of never going to win.
And the sad thing is that these big media companies now we're not just talking about media here in the United States. You've got a company like Fox. They're huge in Australia. They're huge in Europe. So we're dictating the conversation that's happening globally, not just here.
Aren't they partly like 20% owned by a Saudi king, by the way? Nobody talks about that.
Right. Yes. There's a lot of stuff that's not talked about.
Whose wife can't drive.
Right.
Yeah. So
she probably can.
She might be able to.
Only on the compound there. She just
in a golden.
Yeah. So can we twist this anyway that we're going to feel good about this end of this segment, that things can change positively?
They can, but it's hard to put Iceland on the spotlight when all we know about Iceland is Bjork. and a swan dress. So I'm saying, like, no one in this country even knows what Iceland is.
Yeah.
And so that's the first challenge, is getting people to actually look outside of their little, their little neighborhood, their little cul-de-sac.
The crazy thing is that Iceland kind of represented what was going on globally, and people who were really in the know actually looked to Iceland even when the economic crisis was happening. So if they can look to Iceland to see what was going wrong, I mean, they were basically exactly like a smaller version of Wall Street, just making really bad financial decisions, and their economy grew 9 times between 2003 and 2007, and people were looking to that as like, what's going to happen here? So maybe they'll do the same thing politically. They can look to that country of what could potentially happen versus what happened here, and then maybe if people start hearing about it, then you've got an uprising, and thanks to you, people are going to hear about it.